Hi, this video is about getting second lines of credit or a HELOC loan, and often this is a really good solution to do if, of course, if you have equity. If you don't have equity, often you can't get these loans. What they'll often look for is to make sure that you have at least 80% loan to value, including the new loan that they're going to give you. Now, every lender is different and conditions are always changing, but with this economy, things are getting tighter and tighter, especially with the falling housing prices. But probably 80% is good for an owner-occupied. The reason why you would want to get a second line of credit is because the first loan might be a good loan that you don't want to get rid of. For example, if the interest rates are favorable, or if it's purchase money, which means it's the original loan for the house, you don't want to give up those legal rights, because if the values were to fall below your equity, the lender would have no recourse and would not be able to sue you for any deficiency. But in a lot of cases, if you don't have the equity now, then it's probably not an issue. You aren't going to get the refinance anyways. But I strongly encourage you, avoid hard money, avoid foreclosure rescue companies, because if you do have equity, they have ways of getting it from you. They put you in these traps with unaffordable loans. They're called predatory loans under the federal regulations, and these loans are loans that are given with the given that you clearly cannot afford. Generally, the guidelines for loan is you got to keep your payments in the low 30% of your income, and sometimes they'll give you loans that you can't afford. I've seen people get loans when they were unemployed, and it was because they had equity and their intention was to get the house. So please be careful when you get these loans. If you can't afford the house, I would recommend you sell. But of course, that's a decision you have to make.